And the key is, as we've just mentioned, don't Hi, welcome back to Let's Talk Forex. I'm Alison, and as always, I'm joined by Chris. How are you doing, Chris?
I'm pretty good, Alison. I've got my nice shirt on again today because we're recording a podcast. How are you doing?
Yeah, all good. How's it going your side?
I'm off to London in a couple of days. It's going to be cold, Alison. It's going to be cold in London. It's going to be cold and it's going to be wet. So today we're diving into 3 of the most practical, beginner-friendly trading strategies that have been proven to work time and again. So we're going to be looking at the Bullflag. We're going to be looking at the pullback using the 20 SMA. And then we're going to be looking at something called the VWAP Magnet strategy.
Yeah, so these 3 strategies basically cover most of the market conditions that you'll encounter as a trader. They cover momentum, trend trading, and then mean reversion, of course, with the magnet, the VWAP Magnet strategy. We're going to break down basically what they are, how you enter them, how you exit them, and of course, how you manage your risk.
Yeah, absolutely. So there's not going to be too much complicated jargon in this. We're just going to try and show some solid, repeatable steps that you can start practicing with on a demo account today.
Okay, so I'm going to jump into the first strategy, and this is the Bullflag Strategy, and it's basically a momentum strategy, and it's all about catching a continuation move after a very strong burst of momentum, and it's a very, very powerful strategy that really has a high performance rate and a very low failure rate as well.
Yeah, that's right. That's right, Alison. So here's this pattern that we're going to be looking at. The price you want to look for price movement is a sharp upward surge, and that's going to be the flagpole. And then it's going to consolidate in a tight downward sloping range. And that's the flag in this particular case. And you've got to remember that this is a pause, and this is not going to be a reversal.
So what's really happening here is that early buyers are taking profits and new buyers are lining up to enter. And once that pause ends, the price often breaks out and then continues upwards. And as I said, it's a very powerful trading pattern. And again, it has a very low failure rate.
Yeah, so you want to wait for your entry, you want to wait for the price to break above the flag's upper trend line on a candle close. So you don't want to anticipate the breakout here. You want to let it confirm. And ideally, you want to see rising volume as well in tandem with that breakout candle.
Yeah, and I think that's a very important point. Once the consolidation is finished, that rising volume really does give you the signal that the move's going to continue upwards.
Mm-hmm.
So for your stop loss, you want to place it just below the flag's lowest point or slightly under the breakout candle's low. And this keeps your risk nice and tight, and it keeps it logical because, of course, if you get a move below the low of that flag, you know, the consolidation area, then you know that the pattern's largely failed.
Exactly. And then for your profit target, you want to measure the height of the flagpole and then project it upwards from that breakout. For example, if the pole was 100 pips tall, then you want to put your target, your take profit at about 100 pips above the breakout point.
And this strategy tends to work really well on trending pairs like the GBP, JPY, or the NASDAQ. Momentum is very strong. And it's a really good way for beginners to learn how trends breathe and how they continue. And it's very easy to spot them as well.
Yeah. And if the breakout fails and it falls back into the flag, there's no real problem here. You've got a defined stop and you're just going to move on. A reminder that, as we always say, the goal here isn't to win every trade. It's to take the ones that make sense and to make a profit from them.
So that's sort of the bull flag in a nutshell. The next strategy we want to look at is the pullback strategy, the pullback to the 20 SMA strategy. And this is one of the most reliable ways to trade with the trend without chasing price.
Yeah, exactly. And the secret weapon here is going to be the 20 period SMA, the simple moving average. It acts like the heartbeat of a trend here. It's showing where price tends to breathe.
So in a healthy uptrend, you'll see price surge higher, then it'll pull back and drift towards the 20 SMA. Sometimes it pulls just below the 20 SMA, so you need to wait for confirmation. And then it'll basically bounce and continue up again. And that's basically your pullback opportunity. And the pullback is where you get into the trade at a better price.
Yeah, and so here's how to trade it. So first you want to confirm that trend. The 20 SMA should be sloping upward with price making higher highs and higher lows. And then you wait for that pullback, as you just said. You want the price moving back down toward, or as you say, slightly through the 20 SMA.
And the key is, as we've just mentioned, don't enter just because the price touches the SMA. Wait for proof that buyers are stepping in again before you enter. So you might get a slightly worse price, but at least you have confirmation that the trend is indeed continuing.
Yeah, so for your entry, you want to look for a bullish reversal candle, just about where, the 20 SMA is. So like I said, it might go a little bit through, might be on, but you want to see that bullish reversal candle. So like a hammer or a bullish engulfing or any kind of strong green candle closing back above the moving average. And that's your cue to go long on the next candle.
And then if you look at your stop loss, you want to set your stop just below the low of the pullback. And if price breaks below that low, obviously your trade is invalid, and you might actually find that the trend is turning around.
Yeah, and for your profit target, you want to aim for the previous swing high as your first take profit target. If you want to take a more advanced approach to management, you can trail your stop below the 20 SMA, and this will follow the price as it continues higher.
And the 20 SMA actually acts as a trailing stop. So if price closes below it, it's a good signal to exit, and the trailing stop will do that for you automatically.
Yeah, absolutely. And this approach works on the 1 hour chart, the 4 hour chart, or even daily charts. But for beginners, I'd suggest starting on the 4 hour chart. It smooths out a lot of noise that you see on the smaller time periods, and it tends to give cleaner setups.
Exactly. And if another thing that we find is that if your trade aligns with a horizontal support level, say a price swing low or Fibonacci retracement, then you've got confidence. And obviously, the more confidence you have, the more confident you can be in that trade. And that's where the probability basically shifts in your favor. And that's where you have your edge.
Absolutely. What I like about this strategy is that it teaches you patience, it teaches you timing, and it teaches you about the structure of the market as well. And these are all skills that every trader really needs to cultivate before moving on to more complicated or faster setups.
So the last strategy we're going to share with you is the VWAP Magnet strategy. And this is basically trading snapbacks, or basically where you trade mean reversion trades.
Yeah, so the VWAP stands for the volume weighted average price. It tells you the average price security has, or any asset that you're trading. The average price it has traded at throughout the day, adjusted for volume, and that's the important part. In other words, it's the market's fair value of whatever asset that you're looking at.
And this is where institutional traders trade. So they look at VWAP to decide if they've got a good price in the market, and that's why it's such a powerful indicator. And price doesn't stay very far from the VWAP because of that. So when it stretches too far above or below, you'll find it'll snap back to the VWAP. And that's basically the essence of a mean reversion play, where you see price above and below, but that where it keeps on coming back to the mean.
Yeah, and so as a result, it's pretty simple to trade this. You want to wait for the price to move significantly away from the VWAP, so either far above or far below. But then you want to watch carefully for signs of exhaustion. So you're looking for smaller candles, you're looking for long wicks, or volume fading out.
And your entry is basically going to be when you see a reversal candle, so a bearish engulfing pattern where price is extended far above the VWAP. And you'll obviously enter in the opposite direction, and you'll target the VWAP, of course, because you know that that's where price is headed.
So, and for your stop loss, you want to place it just beyond the recent swing high or low. You're invalidated. Remember that your trade will be invalid if price keeps running away from the VWAP. This is very important.
Exactly. Because if you're trading downwards or towards the VWAP and the price has been bullish and is reversing down, but it keeps on moving up, of course, then you might be seeing a different pattern occurring. So the first target is the VWAP itself, as we said, and conservative traders often close there, but others hold a portion of their trade open just in case price now moves down below the VWAP and does the same thing at the bottom, where it turns around at the bottom and comes back up towards the VWAP. So as I said, conservative traders might close at the VWAP, while more traders who are happy to take a little bit more risk might keep a portion open and then trade down towards the bottom.
And then the important thing to know about the VWAP as well, is that it works best in range-bound or balanced sessions. So like when London overlaps with New York, for instance, but once the volatility has died down a bit. This is not for runaway trends.
In strong trending markets, VWAP is it becomes a support or resistance line, not a magnet. So you've got to be very aware of that, and you've got to look at your volume. We don't generally trade volume with a mean reversion play. It doesn't really come into it. It's sort of irrelevant with the VWAP Magnet strategy, but in terms of the Bullflag strategy and the Pullback strategy, volume then becomes much more significant.
Yeah, exactly. And you've always got to look at the higher time frames as well when you're looking at this. Make sure that you're not accidentally entering a trending market, even if it does look range bound to you at the time. So yeah, the VWAP, this VWAP Magnet strategy, what it's good for is it teaches mean reversion, obviously, risk control, and again, patience, which is really key for traders. Yeah, I find that it's very good for teaching people the gravity of price action, because once you see the VWAP working and how this strategy functioning, you're always going to see it. You're always going to notice it, and it just becomes part of your trading toolbook.
Absolutely. And actually, this strategy also, seeing this pattern gives you a very good idea of what the market's doing. So if you see the price going up and down, above and below VWAP, you know that it's a mean reversion play. It's very easy then to judge what the market conditions are. So basically, putting it all together, we've got the bull flag, which helps you catch momentum and continuation patterns, of course. Then you've got the 20 SMA pullback strategy, which gives you structured entries back into strong trends. And then, of course, you've got the VWAP strategy, which helps you profit from stretched markets that return back to the VWAP.
Yeah, and together, they're a really great toolkit for different market types. So you've got momentum there, you've got trending, and then you've got ranging markets as well.
So you basically want to start simple. You want to pick one strategy. You want to master that strategy in a demo account, preferably. And then you want to journal your trades. And once you've recorded and understand how you work with these trades in terms of which instruments you trade, which time frame works better for you, whether you go long or short, and whether you do better going long, whether you do better going short, then you can open an account and with a very small amount and test your strategy on a live account.
Yeah, and always respect your stops, your stop losses, right? I mean, the power of these setups isn't in being perfect. There is no perfect setup. There is no perfect strategy. It's in being consistent and making sure that you have the risk management in place to protect your capital.
And over time, you'll start to realize which strategies suit your unique personality. And that's when you can really make trading your own.
That's absolutely right. And I think people listening to this are probably going to try out all three of these, and they'll find one that they prefer, and then one they're going to stick with. Either way, whichever one you go with, start off with, I think you're going to learn a lot.
Well, thank you so much for watching. That's it for this episode of Let's Talk Forex. If you have any questions, please don't hesitate to pop them in the comments below. And please subscribe to our channel and give us a like as well.
And don't miss out on Alison's educational videos on YouTube as well as this one. I think you do. I think you've looked at these strategies in a little bit more detail. Have you, Alison?
Yes. Yeah, absolutely. I love these strategies.
So have a look through our YouTube channel for Alison going into a bit more detail on this. And I'll speak to you next time. Thanks so much, Alison.
Thanks, Chris. Cheers.